Hey, welcome back to the Legacy Podcast. Jed DeMusi running social media for this guy, Tim Bratz, and hope you had a Merry Christmas. We are now full into 2025 mode, just a few days left in 2024. If you missed it last week, we talked all about lessons learned and the way things are coming together or have come together as we head into 2025. There's a lot of things that we could talk about as we look ahead. I want to maybe start on maybe some of the personal things. There's a lot of aspects of business that you're looking forward to, as am I, but some of the personal things maybe that you're looking forward to this coming year. What are some of the, I know you've got a big trip planned this summer. I know you've got a big number that you're turning in July. What are the things that you're looking forward to?
A big number that I'm turning in July?
The big 40.
Oh, yeah, I guess so. Yeah, and that's I guess that's it, right?
Out of sight, out of mind.
No,
huh?
hey, I've blinded myself of that thing. There's I guess once you have kids, you don't even think about your own birthday anymore. It is one of those years though, right? Like this week I sit down, and every year between Christmas and New Year's, I watch The Men Who Built America. And if you've never seen the series, it's on history. It's unbelievably good. I think it's 6 episodes or something like that. And it talks about the titans of industry back in the late 1800s and early 1900s that really shaped capitalism in America and then therefore the world. And I learn a lot of lessons. I take new notes, and it really inspires me to set big goals. And I think during this week, I get really reflective of not just business goals, but all the personal goals and stuff too. And I think one of the things that I've kind of realized is that sometimes you have to blend some of those goals together. Like there's always, people are going all in on business, or all in on their health, or all in on their family, or all in on spiritual side of things and mental side of things, personal development. I try to blend those things. Like I'll go on a hike with my kids, right? And so I'm knocking out family time and health type stuff, or I'll take the family to a Legacy Summit, right? And let them have a great time while I'm at the event, and then we get together and they get to see kind of how Dad works, and I don't have to be away from the family. So like I try to merge some of those things together in my goals, and when I'm doing goal setting and stuff at the end of the year. And so some of those things are, right, I'm taking the family to Hawaii. Our next Legacy Summit is in Hawaii in February. And so, my kids have never been there. My wife has never been there. We're going out there for an entire week. We got the summit for 2 days, and then we're going to hang out as a family for 5 days.
And you've got extended family coming as well, right?
My parents are coming. Kate's parents are coming. Like it's a big deal. And there's a lot of the team members that are going to hang out too, and a lot of the Legacy family members that are going to hang out for the entire week. So it'll be a really cool way to have a business expense, right? And be able to have a tax deductible, right, trip to Hawaii because we're there for business, and at the same time really enjoy it as a family and see things and show the kids the world because we've never been there. So like that's a really, really exciting one. We have another one that I'm going to bring Kate to in June, the June Summit. That's going to be a really good one. I think we're going to leave the kids home for that one, but that's going to be like a good spousal connection. And then right after that, we're going to be heading to, I got family that live in South Africa, and got moved out there for work stuff. And so I'm going to be taking Kate and the kiddos to South Africa. We're probably going to go for like 2 to 3 weeks at least. And we're going to go to Cape Town, and we're going to go to Joburg. That's short for Johannesburg.
Oh, he's already locked into the lingo, folks.
Hey. But like we're going to go on a safari. We're going to go. We're going to take a trip over to Victoria Falls and do a helicopter ride around. Like this is going to be a pretty friggin' epic trip that these kids will never forget. And Kate and I will never forget. It's been on my bucket list since I was 20 years old, since I originally made a bucket list, and have never been to Africa. So I'm so excited to go out there and see everything and just really own it. And so we'll be celebrating my birthday while we're out there. We'll be celebrating Hudson, my 7-year-old, will be turning 8 while we're out there. His birthday's the day before mine. And just having a great time and really experiencing everything while we're out there. So that's a big deal. And one of the things I just kind of started having this conversation with Kate about is like, we all talk about this lifestyle stuff and what we can do. And listen, we have an incredible lifestyle, but like we could do a lot of stuff if the kids weren't tied down to school system, right? And those activities and all that stuff. And so I've been talking, and I want to make sure the kids are cool with it, and I want to make sure Kate's cool with it. But the kids are like, let's take a year off of school, right? I'm like, all right, well, here's what we have to do. And it doesn't mean you're not going to school, right? We're going to do some homeschool lessons and all these things. We're going to travel around and see places, and you still have to do a report for me on anything place we visit. And I think I can show them the world in 12 months more so than most people see in their entire life, And I'm like, I don't know, when's the perfect time to do it? Fucking perfect time to do it's now. It's right now. And why do we keep on kicking things down the road and deferring things and all this other stuff? And I just kind of had that epiphany. So I don't know if the kids are going to go back to school in the fall, or if we might just kind of like take some time and travel a little bit. And so, or maybe they go for half of the year and then we homeschool them the second half of next year, something like that. The kids thought that they have to repeat their grade, and I was like, no, that's not the case. They're like, oh yeah, well, let's definitely do it then. So, and Kate's big thing is like, do you need to be here for work, right? And are you just gonna be working if we're traveling, and then it all falls on me and that kind of a thing? Because it's been a tough couple of years.
Sure.
Right? 23 and 24 have been me more in the weeds than ever before. And I think with clearing out some of the portfolio and really lightening our load on a lot of that stuff and automating a lot of other things in the different businesses that we have, I'm really excited for where 2025 could go and beyond. So, a lot of personal potential changes. And you know what it makes me think of? Like my brother, I was thinking about studying abroad in college. And my brother... And I didn't want to go because I didn't want to miss a semester at Miami University.
Sure.
And my brother
we
said...
missed you, yeah.
And my brother said, well, dude, what are you going to get in 8 semesters at Miami that you couldn't get in 7 semesters at Miami, along with this semester in Europe? And what else can you see? And it framed it in like a very eye-opening way for me, where I'm like, yeah, you're right. Like what can these kids get in 13 years in school that they can't get in 12, or is it 13? Yeah, it's 13 years, right? 13 years in school that they couldn't get in 12 years, along with a year studying or traveling the world and seeing what Rome is like in person, as opposed to reading about it in a book, or going on an African safari and actually seeing a lion in the wild, as opposed to seeing one in the zoo or reading about it in a book. And that, to me, is what I keep on coming back to, of like, I got to do it, right? Like I feel like I'm doing an injustice to people who don't have the time freedom or the financial freedom to be able to go and take that trip. I do have both of those things, and it's like, it's a slap in the face to lifestyle centric people that I don't go and do it and live that part of my life. So I'm really leaning towards it. There's a couple of sales objections that I have to overcome with Kate, but otherwise that's kind of my hope.
I remember when the final time me and my mom and dad sat down before I went to college, the final kind of dinner we had before I went as a freshman down to Miami, my mom just sat there and said, "What happened to 8?" And she was like, "What happened? I don't even remember anything that happened when you were 8 years old." And she was just sort of reminiscing, I don't know, she was getting sort of maybe emotional about just me leaving, but the idea that not only could your kids experience so much more by spending a year outside of school, but the relationship that you will have with your kids obviously will deepen more so than it ever could with them going to school for a year. So I think it's not even just about your kids, it's about the relationship that you have with them. Not just what you can show them, but what you guys can do and learn together. Kate, I'm on board with this. We'll figure out all the other stuff.
I agree. No, I think it makes a great point, and it creates these memories that nobody will ever forget, and it creates like this. Like, dude, after the summit in Denver, we were out in Denver. Kate and the kids came out.
Yeah.
Kind of mid summit, so we could do the business stuff. They showed up, I think, the last day or whatever, and got to do some fun activities and stuff with them. And then we stayed in Colorado and Utah for another week afterwards. And Hudson was big into dinosaurs, so we went on this Dinosaur Trail, a vacation I never thought I would ever go on. And we drove around, and we went to 5 different dinosaur museums over the next 5 days throughout Colorado, Grand Junction, and Went up to, it's called like Dinosaur National Museum or Dinosaur National Park or something like that in Utah. We drove through, dude, there was an area where we drove for 2.5 hours where there was not a single car or anywhere to stop, right? And it was like, there's no cell phone service or anything. And we had a conversation with the kids of like, what happens if the car breaks down? Do we need shelter, food, water, communication? Like what do we do? It was like a conversation in jest, but it was like a lot of fun to like look back at that. And now the kids, bring that stuff up. And
that's cool.
We went to all these different places that we would never thought we would ever go. And that's like this random memory that is like, cemented into our minds because of this cool random, last minute trip that we decided to take. And I don't know, really, really fun. And I just think how many of those kinds of situations can we put ourselves in? And we have to be intentional in order to do that.
Yeah, we're going to have to figure out which of those trips Cam is going on, which ones I'm going on. Some Marathon Wednesday sessions in our future. I see that in 2025. On the business side of things, I know that you either have or are in the process of selling off close to $150 million worth of assets in this year or close to it by the end of the year in 2024 or in the beginning of 2025. But you did mention on last week's pod that you're going to buy close to 50 to 100 million in assets every year until whenever. Is that something that you foresee this year?
Yeah, the type of property we buy has changed. Our buy box has changed big time, right?
Which it should, right? It should evolve. It should change. It shouldn't be the same as it was 4 or 5 years ago.
Well, I think, yes. And I think there's this evolution that you go through as a real estate investor. Like I started out with a real estate license. Well, actually, I first started out in the trades. I had a painting business. And then I interned for a home builder. And then I got a real estate license. And then I started wholesaling. And then I started flipping. And then I started buying single-family rentals. And then small multis. And got into bigger multis. And I got into a 100-unit complex. Like a decade after I started getting involved in the real estate journey. And then I started out in C-class, big apartment complexes, and then I got into heavy value add, and then like all these things have kind of. I got into B class, and then now I'm in A class. Now I'm in new construction. Now like you're evolving, right? If you're not growing, you're dying. If you're not ripening, you're rotting. And that for me is part of the process of. I couldn't have built the single family portfolio if I didn't have a turnkey flipping business, right? And I couldn't have built or bought a 100-unit apartment complex if I didn't buy a bunch of 8-unit apartment complexes that got me up to 100 units to then qualify for that single deal that was another 100 units, right? And so I think there's stepping stones. I couldn't get into B class and A class stuff if I didn't start the C class stuff because the big guys didn't want the C class stuff, and I was willing to roll up my sleeves and get my hands dirty in order to do that when other people weren't. And so everything's a stepping stone in order to get to that next phase, but I think staying at any certain level and stagnating at any certain level is what really scares me a lot. And so, you grow and then you shed and you trim the fat and you refine your business and then you grow a little bit more and then you get into the next biggest thing. And for us right now, and probably where we're okay, and the one place where you're okay staying is A-class, new construction properties in great areas that we in-house manage and we can hold forever, right? Like that's the pinnacle. I want good properties, good areas, in-house management, good debt that we hold forever, and that is the plan. And so we have some strategic developer builder partners who are building product for us, multifamily, townhomes, even single-family developments that are rentals, build to rent, and we're coming in and buying it at CO. And by the way, if you are building or you want, I'm happy to buy your product once you hit CO and you have a predetermined buyer. Like I'm giving these builders contracts before they ever break ground, before they ever show up with contractors on site. Of like, here's how much I'm going to buy it for. I'm going to buy it for X number of dollars. You're going to build it for this much. You got this much profit baked in, predictable buyer, qualified buyer that's going to come in and buy the entire development as soon as you're done. And so it's a great play for the builder who likes the transaction side, who wants nothing to do with ongoing ownership and management and all those headaches. And some of these builders, they do want the long-term wealth building aspect, but they just don't want to deal with that stuff. So they might roll part of their profits in as a limited partner in our deals, or might take the whole commission, or might roll all their money in, or a hybrid of both.
Yeah.
And so we have 3 or 4 builders and developers who are very time tested and know their stuff that we're working with on that front to deliver consistent product to us on a consistent basis every year moving forward. And so, and we're looking for more. So specifically, if you're in North Carolina, South Carolina, I would do East Tennessee or Ohio. We would be open to partnering with you on buying product from you in certain areas, new construction. So that to me is predictable. It's easy, and even if they aren't delivering, like we just closed on a $10 million deal, and a $10 million deal for us. I'm not trying to puff my chest out or anything, but it's a pretty simple thing for us to do these days. And so I can easily close on one of those every quarter, $10 to $15 million deal, and hit $50 million in acquisitions on an annual basis. And that to me is an easy business to build. It's a simple, probably without breaking anybody's back on the amount of work that goes into it. And that combined with new product deliveries, I think we can do 50 million, or we can do 25 and 75 million. And that's our goal moving forward. It's just buying clean properties that are good properties, good areas that we can either assume debt or qualify for new, good, fixed rate, long-term debt. We in-house manage everything now, and then our goal is to never sell, right? We got a great product that we never have to sell, and we can just hold on to it and refinance every 10 years and pull a bunch of tax-free money out. So that's where we're at this stage in our real estate business. And then from a coaching business, dude, I love legacy family. That gives me more fulfillment than anything else that I do. Seeing somebody who comes to us and it's like, dude, there's a big bottleneck, and I'm like, dude, let's break through this glass ceiling that you think is a hurdle in your mind, and seeing their eyes open up and be like, holy shit, dude, and then you just feel bulletproof because they know that we've got their back. So legacy family, but I'm gonna refine legacy family. We're not gonna it's not open enrollment, it's invite only moving forward. And what we do have as a stepping stone to legacy families, legacy boardroom. And that's going to be the big thing that we're talking about, which is it's essentially a board of directors for your business. And for the price of a 1-hour consult on a monthly basis with a chief marketing officer or a chief operating officer or a chief financial officer or a chief HR officer, for 1 hour of that on a monthly basis, you get that 5 days a week, every week of the year. You essentially get 20 consulting sessions, right? And so we do a group call Monday through Friday for 1 hour about marketing and acquisitions, or operations and project management, property management, asset management. And we do one on team building and org charts and org structure and hiring and firing. And then, we have another one on raising capital. And Fatty was our chief legal officer at one point. He doesn't have his license anymore, so we can't call him that. But he understands that side of thing, and he's on phone calls. So it's my executive team that's a board of directors for businesses that don't want to take multiple 6-figure salary on, where they can hire somebody for a few $100s a month, have access to this boardroom, and that there's no higher value than legacy boardroom. And I'm super pumped to really push that and promote that. It's infinitely scalable from our side on a business standpoint. And if we have so many people join, then we can just, extend our office hours and make sure that everybody gets their questions answered every single day in there. So even though it's a group call, we do individual underwriting of deals for you bring a deal, or individual, circumstances on a certain employee or hiring somebody, an org chart or whatever. We can talk through all that stuff. So I'm really, really fired up about that.
And I think obviously the boardroom is open to our legacy family members. Mm-hmm. And it's when I jump on calls and just to listen, just to hear our current members, what they're going through. Not only is it about should I do this, but the board of directors is also there to say, you don't want to do this. This is something that we did. This is something that won't work. This might seem like the way to go, but it's really a shortcut that it's not worth taking. So the amount of value isn't necessarily just in taking action, but it's also the actions that maybe you shouldn't take that you don't know about. So there's just an infinite amount of ways that you can utilize Legacy Boardroom. It's not just, hey, I've got a deal, should I buy it?
No, there's networking in there. There's deal flow that happens.
Yeah.
There's money flow that happens. There's this ecosystem of progress in commercial real estate, right? And all different asset classes all over the country in different markets everywhere. And so, dude, how many times have people just posted in the Facebook group and said, hey, I need to raise money on a short-term deal, and my lender bailed, I got to close on Friday, and private money comes out of the woodwork from somebody in Legacy Family or Legacy Boardroom and funds that deal within a matter of a couple days. Or looking for an operating partner in this community in Texas, and all of a sudden somebody raises their hand, I own 200 doors there and I can handle the operations, I got a team, talk to this person, or at least just makes a reference. Like, it's unfat, like you think you're coming there for consulting or whatever, but like the connections is really where it's at.
The friends you make along the way.
That's it, buddy.
No, I think there is sort of, and I think you can speak to this, is when you're sort of getting started, or by getting started, I mean maybe you've done a deal, whether that's residential, commercial, multifamily, whatever it looks like, and you think, okay, I've proved the concept, but I can't, I'm still going to kind of do it in the dark because, maybe I didn't make as much money as I thought, and I don't want anybody to know about that. So I just want to kind of keep it to myself, and maybe I can continue on my own to sort of forge the way. I'm sure everybody thinks that at some point, but then there's something that clicks that says, maybe I should lighten my load a little bit. Maybe I should try to figure out if there's anybody that I can bring this stuff to that has already been there that can just make it that much easier for me.
Well, dude,
yeah.
the fast track to success, there is no fast track to success. There is no, shortcut to success. There's one, and that's paying for consulting. That's paying for coaching. That is expediting your progress is the only way to shortcut the amount of time and shortcut the amount of money that you're going to lose and get your ass handed to you is by learning from somebody else who can coach you and hold your hand throughout the process, so that way you can learn from somebody else's mistakes that took them 20 years to figure out, right? And be able to have that answer immediately. Like, that is the only shortcut to success. And we're kind of jumping around the price, but it's $500 a month, dude. For $500 a month, like you couldn't get an hour. Like, that's what an hour with an attorney costs. That's what 1 hour with Scott Hannes costs. That's what 1 hour with a chief operating officer would cost. And you get 20 hours essentially of calls and stuff per month, and unlimited Facebook questions and access to all that stuff. It's like individualized. And so it's like, and we're running the promo up to Commercial Empire of it's only $300 a month. So it's like, if this is something that you see the value in, make sure you plug into Commercial Empire. And that's what is that, January 16, 17? Mm-hmm. January 16, 17, all updated, all market updates for 2025, exactly how we're finding deals, how we're underwriting deals, how we are funding deals, creative financing, private money, traditional financing, operations, project management, property management, the asset management, exit strategies, all new revised content in 2 days, done virtually, and literally the ticket's $200, $199 or something to come out to that. And then we will be sharing Legacy Boardroom at Commercial Empire of saying, hey, anybody who wants ongoing support, plug into Legacy Boardroom, and it's only going to be $300 a month and offered at that price point one time during that weekend. So ping us if you want info on that beforehand, and then obviously, or plug into Commercial Empire, you'll have until that weekend to sign up at that price point. But like, it's friggin' stupid, man, how inexpensive it is and how high value it is. So anyways, we don't have to keep on going into that.
Well, I think it's funny too, we do talk about sort of, you couldn't get an attorney for $500 an hour, but I feel like a lot of times people aren't even considering investing in themselves. They're trying to get a liability for $500 a month, mm-hmm. or they think, hey, I've got a deal in my pocket, I'm getting some cash flow, I'm getting some of this, I've got it all figured out. They're not even considering, I need more education. Mm-hmm. They're thinking, I need to start flaunting this. So it's $500 that you're spending on something that you don't need, as opposed to something that can grow what you've already sort of built upon.
And compound on.
Yeah.
Dude. Like, this is stuff that you learn one time and you have it in your repertoire and in the back of your head for the life of your career
Right.
as a real estate investor,
Which goes a lot farther than, just bottle service at the club for you and your boys
Yeah.
for one night because you feel like you've got it all figured out.
Yeah, and I think no, it's super high value. So
Yeah.
plug
So-
in, check it out.
We did mention last week that we were going to talk about smart management. We talked, it's the software that is, in your words, is going to sort of revolutionize the way that properties are managed, integrating sort of all of the components that you and your team have used over the years into one system that can prioritize every aspect of property management. If you want to hear more about it, you can plug into last week's conversation, but I know you're super excited about it. We talked about your level of excitement about it. I think one of the things that's important for people to understand too is that the partnership program that you guys have put in place for smart management, for people to switch over, there's sort of a bonus aspect of it for people who want to get in on the ground floor.
Yeah, so high level smart management takes all these different softwares, a CRM, accounting software, project management, and like workflow software and a property management software, puts it all into one, and then it integrates a bunch of AI. So that way, what does it do for you is it shows you ways to increase income, shows you ways to decrease every line item of expense on your commercial property. It also automates a whole bunch of different things so you don't need all the personnel and it empowers the owner to take operations back in-house. It also empowers the management company to not have to need as many staff members on site, and it reduces the risk of human error in a lot of aspects which is a big deal in commercial real estate. And so you're able to save these salaries, you're able to increase your cash flow, increase your NOI, and it incrementally, increases the value of the property because of increasing the NOI by that much. So it's like, dude, and listen, I've used all the other software. I've used Yardi, Appfolio, Entrata, Rent Manager, Building. Like, dude, literally I've used all of them. This smokes all of them. It smokes all of them at a lower price point with way more value, and I truly think it will revolutionize property management, and it's going to empower the owners. And so I'm really, really excited about it. I realize it's like changing your friggin' cell phone. It's a pain in the ass to move management softwares. And so how do you incentivize someone to move? Well, one, I think there's enough pain point in the marketplace right now. People have gotten their ass handed to them by bad management companies, by bad partnerships, by bad personnel, and just things that could be automated, and we have automated in smart management. So number one, it's a huge pain point right now. Two is we're actually incentivizing people to move over by offering, like, we're going to integrate all the data, and we'll migrate all the data over to our software from whatever they're using. So we'll make that easy. But the other thing is we're actually giving equity in our property management software to early adopters of the software. So for every unit you bring on, you get a percent and maintain, right? And I realize people buy and they sell, and so that we have an algorithm that kind of balances out, an equation that kind of balances out what your average number of units is over the course of now for the next 5 years or whatever, until we go public or until we sell or until we whatever, and you vest into a certain amount of equity in the company for doing that. I think it's a brilliant idea because, one, it gets people to move over, right? Mm-hmm. Two, it gets people to give feedback a little bit more openly of like, hey, here's how we make it better. Here's what I'd love to see. Here's what I'd love to improve on. Here's what I'd love to add if you did this or did that, or could, somebody's coming on who does a bunch of light tech and an early adopter. They manage 2,000 doors, and they own 2,000 doors that are all low-income housing tax credit stuff. And they're like, if you had this checklist in there, it would really make my life easier. So now, boom, now we can integrate in different light tech owners and make their life easier. And this could be kind of like the light tech software as well, right? And it has that component. So we get the feedback. Number three is, dude, it gives people an idea to just go and, it gives them the opportunity to go and promote it, right? Now we have a bunch of people who are using it, and the more they promote the software.
Yeah. Rowing in the same direction.
Dude, and it's awesome. Now we have more people coming, and it increases their equity value in the software because of it, and it creates stickiness long term where they don't want to leave because they're going to have a big check that gets, like, dude, I owned a management company. Every time you make more money in management, You got to hire somebody new, and then eats up all the profit. And you don't make a bunch of money in property management unless there's extreme scale, and usually quality falls off. So, these property managers who have a business, there's some, value to it, but not an exponential value like, dude, bring over your 20,000 doors or your 50,000 doors or your 100,000 doors that you manage, come over to the software, and we'll give you equity in the property management software that has a multiple that's 50x EBITDA, which is the margins are huge. We don't have a bunch of tech debt because we self-funded this whole thing, and we just started bringing on a couple of lenders, investors, and stuff like that. But it's inconsequential to what the amount of money that we've spent on it already and what the value of this thing is. And but I think about that, and I think about this thing goes public and it's valued at $2 billion, and it's only the first probably 50,000. We might go to 100,000 doors, invest into equity into the property management software. Dude, that is worth a boatload of money. It's worth hundreds of millions of dollars when we go public. And so if you bring over that door count, then guess what? You incrementally get a certain percentage of that ownership in the software business. And from there, all you got to do is just give us feedback, promote it. And even if you don't do any of those things, I'm going to be out there promoting it. We're going to keep on investing in the software, making it better and better and better, to the point where somebody comes in, makes us an offer, wants to buy into a big chunk of it, or buy out the company altogether, or we take this thing public and we just hold on to it, or we don't do any of those, and it cash flows like a friggin' monster for the next 20 years, 50 years, 100 years. But we're really, really excited about that aspect of it, of the customer partner program is what we're kind of calling it.
Yeah, great. 2025, time to thrive, right?
I think it's been survive till 25, and now it's thrive in 25, right? And you see a big change in the market just in the second half of Q4 of dude, there's so much excitement. All these investors come out of the woodwork. Brokers are lighting up my phones. Buyers are lighting up my phones wanting to buy property. We've seen a lot of optimism amongst lenders, and even though interest rates haven't really come down, there's been a lot of excitement and a lot of money that's coming off the sidelines that wants to be deployed right now. So I think it's going to be a really good year. It's going to be the new administration's very pro-business, and so I think there's going to be a lot of things that come into place that are tax advantages for businesses, tax credits for certain types of businesses, making it a more business-friendly environment. And when you have a more business-friendly environment, the money that gets generated then gets disseminated out to the general populace, for the people who work those companies and have jobs, and unemployment's lower now, and everything gets easier when the economy's flowing. And so there seems to be a lot of general optimism around that right now, and I'm seeing it firsthand. You've seen it in the stock market, you've seen it in the crypto market, and I think it's going to just keep on going. So there's a lot of excitement for the next, really the second half of this decade.
Yeah, you missed a good Halloween party. I'm trying to think of what you missed that semester. It was a pretty good one. That first semester, we sang "Living on a Prayer."
Yeah.
Yeah.
Did you?
Yeah.
We've never done that any other time in
No,
Miami, did
that
we?
was not like that.
Oh.
Not like that. So there are some changes coming to the Legacy podcast as well in 2025 that we didn't really have a chance to even touch on. But we're excited about that from a social media perspective. And we're obviously, Cam and I and all of the Legacy Wealth Education team, really looking forward to 2025. And we thank you for all of your efforts and being the type of boss that values social media and values putting marketing dollars in play. And it's going to be a great year.
Yeah, man. I'm excited. It's going to be a great year.